Alrighty, we are here for our second interview with we've got Dave Floyd here from Aspen. How's it going, Dave?
Fantastic. How are you doing? Happy Monday morning to you.
Happy Monday morning. Yeah, look, I'm really excited to have a chat with you because I think out of any trader that I've ever met, through our time at Global Prime, you're probably the one that comes to mind that has the most experience in the markets in terms of really starting out on the pits. And I think your experience goes back to 1990. Is that correct with your trading?
Yeah, well, maybe not quite 1990. I was in the investment industry in 1990, right after I got out of university. I actually didn't get onto a official trading desk till spring of '93. And that was at Standard Chartered Bank. I was on the FX and fixed income desk. That was where I got my taste of what I really wanted to do.
Amazing. Well, I think I was in my diapers back then, so I'm really looking forward to hearing a bit more about what life was like for you back then. So look, since then you've worked, I've got over here with trading firms, a bit of prop trading and at certain banks as well, notably Standard Chartered. And then obviously you started Aspen in 2002. You've been around for a long time in the markets. You've seen a lot of different things. You worked at Standard Chartered, used to, trade on the pits as well back in the 90s. So maybe I'll just put it over to you in terms of these days with Aspen. What's that about? What are you doing on the Aspen trading side of things?
Well, Aspen trading was kind of the next step after I did prop trading. I was, as you said, I was at Standard Chartered Bank. I was literally only there for about a year. They did a reorg, and I won't go into all the details, but I decided to leave. I was young enough where I didn't have any major responsibilities. And by that time, I was in San Francisco, and enough people have been talking about working on the floor of the San Francisco Stock Exchange, whether it be the options floor or the equity floor. And that really intrigued me. I for some reason, even back then, I thought there was the ability to capture intraday moves. And I probably wasn't even on the floor for a month before everything started to, it was so obvious, things started to go electronic. And I became a day trader. I did that from 95 all the way to about 2002 and mainly traded equities. In fact, only traded equities. And then I kind of migrated back to FX, which is kind of where I got my start with Standard Chartered. And I started my own company called Aspen Trading Group. And originally it was just me providing my insights to a lot of my colleagues from the bank days, a lot of my colleagues from prop trading days who'd moved on to trading other markets. And over the last 20 years, it's kind of continued to be that, kind of my views on the markets, what I'm trading. A little bit of money management in there too. And I can continue to trade my own book all along. So it's been an interesting journey. I mean, there's been some great times. There's been some times where, you just can't seem to do anything correctly, but that's trading.
Sure. Yeah. And in terms of like when you first started getting into trading, did you kind of do it by yourself or did you have a mentor that was helping you out? Did you have some guidance from somewhere? Were you part of like a prop team? How did that look for you back then?
Yeah, that was probably the most pivotal thing. I was part of a prop team. I'd heard about a group of guys that had migrated off the floor. They were clearing through Goldman Sachs, so they had floor trader leverage. And basically the deal was I could put up 25 grand and get floor trader leverage and trade New York Stock Exchange stocks. I was like, shit, where do I sign up?
Yeah.
But when I got into, the driver's seat, so to speak, and real capital was on the line, I froze. I didn't really have a plan. I had an idea of how I wanted to trade intraday, but the thing I remember so vividly back then was I was hesitating, for even just a fraction of a second, trying to lift an offer or hit a bid. And that was the difference between success or not succeeding or even failure. So yeah, there was probably, eight or nine guys in the room, we're basically shoulder to shoulder, typical trading desk. It was fantastic. And then this one guy came in, he just left Microsoft. He was a programmer and he too kind of had the day trading bug. And I'm watching him trade and he was being incredibly decisive, making decent money. And I'm overlooking his shoulder and he was totally cool with that. And I realized he was kind of executing the market in the same way that I was envisioning myself to do it. But he was doing it with decisiveness because for some reason, he'd managed to put together a little bit of a track record. He had confidence. I didn't have any confidence at that time. Therefore, pressing the button to me was kind of like flipping a coin.
Sure.
But once I saw somebody else doing that, I was like, well, shit, I can do this too. And I'm maybe oversimplifying it a little bit, but it was that camaraderie, that support that allowed me to say, you know what, I can do this, and started pressing the button and really started to elevate my game as a day trader of New York Stock Exchange stocks, and went on to do that from 95 to about 2002. That's when the game just dramatically changed. It became difficult to do that. But I guess in hindsight, without getting off on too much of a tangent, you probably could have continued to do it. You just had to be smart and think that there was other ways to do it. And I think at that point, I was like, oh, this isn't working anymore. We're trading in penny increments. There's algorithms. I can't do this anymore. And I think in hindsight, that probably wasn't the right call. I think you just had to be curious and reach out to other people. And I think this will be helpful in this conversation, is that markets don't change. They may change in terms of the way they trade, and it's up to you to adapt and find out how that is. I didn't do that, and I'm not complaining about that, but in retrospect, I'm like, yeah, probably should have spent a little bit more time trying to figure out how they had morphed.
Yeah. And I think back then on the trading pits, it was all like kind of audio inputs, right? And there were no charts, obviously. So how did that, like, I'm really interested, like, how did that audio input that you're hearing translate into the trades that you were taking versus looking at charts? And, you know, does that still inform kind of the strategy that you take these days?
Well, actually, you know, at this time, I was already upstairs. I was off the floor. I was trading in front of screens, and we were looking at charts. But you mentioned a really interesting thing. We still had an audio feed piped in from the S&P pit in Chicago, so that we could get that crowd noise. And there was an announcer alongside the pit who was basically giving you play-by-play. Goldman's coming in with 50 on the offer. That was really, that was kind of the replication of the pit, but not while having to be in the pit. I think that helped tremendously, because I think if you were just looking at screens with no audible, you were missing out on a big thing, a big piece of it. Of course, that doesn't exist anymore now, but back then that was key.
So it's almost like maybe the audible kind of things that you were hearing from the pit, is that almost translated now into Twitter, where you can kind of see what people are talking about things and get a bit of market sentiment for where people position? And also, like, an interesting one I've got for you is, when you were hearing, you know, the market sentiment coming in from the pits, were you taking contrary trades to what they were saying to try and do the opposite of what they were saying, kind of like piggybacking off of what they were doing?
No, usually it was going with the momentum. You know, you might go through 10 or 15 minutes of listening to the audible coming off the floor, and you started to get a sense of who was buying, who was selling, and you know, who probably had more to buy. You know, because the guy in the pit in Chicago calling all this was looking at everything around the pit. He was watching the floor brokers, watching the guys at the top of the pit who were getting the phone orders in from the big institutions. He was piecing things together and then relaying them to us. In fact, I went down and visited him when I was in Chicago once, and I was sitting there with him, and it was like 20-1 or 20-1 Pacific time, but it would have been 20-3 Chicago time. So right going into the close. And Lehman Brothers had been a big buyer in the last half hour. And he noticed something really, really subtle. He noticed the floor pit manager, so to speak. He glanced up at the clock. He knew he had about 20. And again, he's speculating, but you're watching all this. And he's like, you watch, there's more orders coming, you know, buy orders. And sure enough, the Lehman Brothers just kept coming in at that time, more and more orders in. So if you're hearing that and you're looking to go long anyways, you're leaning into that. You're using that to your advantage. I usually didn't try to fade that stuff. I was trying to be with the big guys, not try to go against them.
Sure. So what do you think these days, you know, for a typical retail trader, you know, they're trading on MT4. We're likely to move them into, you know, more professional platforms like Trader Revolution. These retail traders, where do you think they're able to then go and get the info these days, where they can kind of see where the big boys are positioning themselves and maybe follow along?
Well, you know, there's not an obvious place to go, like an audio feed from the pits, because that doesn't exist anymore. You know, I think for the way some people trade, you know, a Twitter feed or the like could be a very helpful thing. Maybe go to Stock Twits, or you know, maybe some Facebook feeds have some good information. But in terms of where you're trying to piece together where the players are, where the big footprints are, there's plenty of technical tools out there that you can use. There's time and sales, all these types of things. It's really a question of what type of a trader are you. I think if you're an intraday trader, which I do a decent amount of on the S&Ps, not necessarily in FX. I don't think that market's really geared towards that. There are tools, technical tools that you can use to get a sense of what people are doing. And, there are technical tools where you can kind of find out where lots of orders have been placed and, where there's a footprint in the market, so to speak. So luckily, there's been a democratization of all the data out there. When I was coming up through the ranks, there was still that, institutional insights and, prop trader retail insights. And we weren't even on the same playing field. Didn't mean we couldn't play the game, but boy, if we could have got a few of those nuggets that they had, it would have upped our game. But now, everybody's got access to most of the same information. In fact, if anything, there's too much information out there. You're talking about retail traders. I'm thinking about how your clients come into the game, how you retain them, how you get them to be successful. And on some level, I think there's too much information because you don't know what's good, what's bad, what's bogus. And I think that can make it really difficult for traders. What do you focus on?
Yeah, especially when you're first starting out. I mean, I can look at my own experience, and obviously I'm very in touch with our retail as well, so I get to really get a good on their experiences as well. And you're right, people come into the game and they're like, okay, where do I look first? And a lot of them will fall into the trap of looking for the next best indicator. And of course, most of them lag price, and they kind of just stick to MT4 and put these strategies together. But they go down that rabbit hole, or maybe they get on the macroeconomic side of things. But it can be very tough, I think, to kind of know where to hone your focus on. And one of the things that we've done for our clients is created a space called mentor rooms, where it's almost like our community is voting in different traders that they've seen do well, and asking them if they're able to go and mentor other traders inside our platform. So that's, I think, an interesting approach, because you can choose someone that's either MT4 indicator based or Elliott waves. Or Ivan, for example. I don't know if you've seen Ivan Delgado now has a course that he's structured with us. So trying to find different people that can give different flavors to someone in a very packaged way. So they don't have to go out and learn everything and try and make it work for themselves. They've actually just got to find something that makes sense to them, focus on this one mentor, and work inside a community to kind of build. So I totally agree with that. So let's move into the kind of money management side of things. So that's something that you deal with. Maybe I can ask you a question and pick your brain. We say to our clients that you guys should be looking at $1,000 into $1 million with super high leverage. If anything, they're designed to blow clients' accounts. And obviously, we talk a lot about B-books and how that works. I don't think we're going to touch into that today. But we like to say to them, if you can work out a way to make consistent money in the markets for a couple of years and build up a good track record, then you'll be able to find outside money that you'll be able to manage. Or maybe your broker can give you some capital to play with, and you can kind of like lift that up over time. So I guess my question to you is, if someone comes to you asking about how to manage capital and how to go about that, what kind of advice do you give them?
Well, one, it changes your whole perspective on it, because suddenly there's that burden is not the right word, but there's that heaviness of, whoa, I've got somebody's capital under my watch, and it's up to me to be a good steward and a good fiduciary of that. So the fact of the matter is, it does weigh on your decision making. You might think twice. If it's your capital, you might still hesitate because you're not sure about the trade or whatever your mental shortcomings are, because at the end of the day, even once you get a strategy in place, the game, success and big time success is usually dictated in terms of what's in between your ears, your mental state. So there's no doubt, when you're managing capital, it does add an additional layer of complexity. But, in terms of advice, I mean, I think you started to go down that path. Have that game plan. Don't deviate from the game plan, and just chip away. And that kind of goes back to what you were just talking about in the previous segment, which is find a process that works. And when you go through phases where it doesn't work, it doesn't mean that it's junk and that you need to go and migrate to something else. This game is all about being very, very consistent and not deviating from your plan until such time where it's pretty obvious that what you're doing is not working. But if it doesn't work for 2 or 3 days or 2 or 3 weeks, that doesn't mean that it's blown up. And I would say the other thing that I think is really key is less is more. There's only so many instruments anybody can really effectively monitor and trade effectively. My stable's really tiny. S&Ps, futures that is, or CFDs if you're non-US, 10-year note futures, and a handful of FX pairs. That's all I trade.
That's keep it simple, stupid.
What's that?
Say. Keep it simple, stupid. The KISS principle.
Keep it super simple. But it doesn't have to be those instruments. It could be stocks. Trade 3 or 4 stocks. When I day traded equities, I might trade the same stock every day for 3 or 4 months because you got intimately familiar with how that stock traded, and that offered you a slight edge.
Yeah, and if you've got positions on multiple pairs going at the same time, all of a sudden your focus is here and there. Yeah,
it's like, oh crap, this one isn't working, this one's working, and the next thing you know, you're playing whack-a-mole.
Yeah. So, we talk a bit about curve fitting where, maybe it's more for algo traders, but they make a strategy, doesn't work so well. They go back to their back test and they change a few of their parameters that all of a sudden now it looks a little bit better. And what you're talking about, I think, is similar even for someone that's manually clicking, because it's exactly what you said. If you have a strategy and you're sticking to it until such time that it really shows you that it doesn't work, then great. But a lot of people will, get into a strategy, see that's not, didn't do something, go back, change this, change that constantly, and then they just keep pushing the needle further down the road. So
I think the beautiful thing about technology is, again, it democratizes everything, but I think on some level it gives a really false sense of what you can do. You don't have to really look any further or think about it much more than you look at a Renaissance Capital. I don't know what they have under management. It's like 58 or 70 billion. And it's all algorithmically based. And even they have their tough years. They've been incredibly successful over the decades, but you're competing with not only a pile of capital that can put it into resources, but you're also competing with statisticians, mathematicians, physics folks, and whatnot. So again, it doesn't mean that some simple algorithm can't be effective, but I still think that given the market is a representation of human beings, I still think a human can go in there and interact with the marketplace and still find a way to carve out an edge. Look at the new Market Wizards book, The Unknown Market Wizards. It's the first thing Jack Schwager talks about in the preface. He goes, despite all the algorithms, I interviewed, I think, 7 or 8 discretionary traders, and they've all been incredibly successful. So yeah, the markets have changed, but it's still human beings interacting. It's an emotional thing. It's all those things. It's imperfect. And that's how, as a trader, you can make your money over a period of time, is just exploiting very small edges. That's about all you can really do.
Amazing. So you touched on Jack Schwager's Market Wizards book. Any other books that you've read lately or that you recommend to someone either getting started into trading or,
Well, those ones are the best. I mean, that's what got me really inspired. I was living back in Boston at the time, and I hadn't even heard about the book. And one of my coworkers was like, you heard me talking about trading, goes, oh, you ever heard of the Market Wizards book? I was like, no. I read that in like a night, and I was like, okay, this is exactly what I want to do. So I think that's a great series to have because it's inspirational, and it also puts into context what it really takes. So highly recommend that. God, there's just there's a lot of good trading books out there. But I still think, for me personally, where I spend most of my time right now is not more analysis. Like my wife always says, again, it's not to say that the learning never ends, but she goes, my God, you've got 20 odd years under your belt of looking at charts and price action. It's kind of hard to learn anything new. Where I spend most of my time is up here. I try to on the mental game, because that's where I have my shortcomings, probably like all of us. There's times when I hesitate or I second guess, which is ridiculous, but I'm a human being. So I spend most of my time trying to get just like an athlete, trying to be totally dialed in when that bell rings.
Yeah, nice. And that's something that we speak about a lot as well. You can have the best strategy in the world, but if you're not okay up here, and if you haven't worked out how to master your impulses and sit on your hands, for example, or the
Yep.
opposite, like what you're talking about when you're ready to place a trade and you're hesitating, there's so much about the mental component that if you can't get that psychology right, then you're probably not gonna make it as a trader. So from what I understand, you really like to share your trade ideas and knowledge with the world. We can see even from this interview how open you are about your experiences and what you've seen. There's like a bit of a maybe a misunderstanding that a lot of traders like to keep their secrets to themselves, kind of thing. Can you maybe touch on that about why you like to share your stuff versus someone else that might like to be very guarded about their approach to the markets?
Well, I wish I could tell you I have like some secret sauce or something. I mean, there's a couple
Mm,
things I've developed internally, but again, it's not like overly
mm,
secretive. I trade charts like most people. I look at
yeah.
stochastics, I look at Elliott wave, I look at some support and resistance levels. There's nothing proprietary. And, I could tell a million people about what I'm looking to do, but most people aren't going to usually execute at the same level. Or what I mean by that is not everybody you send it to in terms of my clients is going to take every
Mm,
trade. They're going to look
sure.
at it and go, that doesn't really fit with my profile. Or Dave's entry is okay, but I think I can do better if it goes to here. So all I'm really providing for my clients is here's what I'm seeing today or this week, and I'm hoping to offer them my perspective, maybe add some ideas to what they're already doing. And I've got a range of clients. I've got beginner clients, um, you know, the typical retail client just kind of getting into it, looking for a little hand holding.
Mm,
I've got clients, at a really high level.
yeah,
I've got a handful of traders at Citadel in London who get my stuff. So
cool.
it's just a matter of there's certain people I like to know what they're doing because I want to know their perspective. But
Mm,
in no way does it dilute. It doesn't. It's not like people are going to front run me, or the more people that know about it, it's going to dilute the process. I'm just sharing an idea. Like last
mm,
week, hey, I want to get long dollar Swiss above what was it here, 90.58, and I'm going to put my stop loss here. That's all I'm doing, and I'm showing the chart as to why I
yeah.
think it's going to go, why I think it's going to go to that price target. So um, the other reason I do it too is that I have to do it anyways. It
Mm,
it's forces me to go through the process each morning of, okay, what am I going to do today, as opposed to winging it.
for
And if I
sure.
can share that with a bunch of people around the world and have that be part of my business plan, well, why not?
Makes sense to me. So, going back to what we were saying before about having that, intuition, I guess, and it's like, how do you think traders can be more open to their intuition without becoming more impulsive, I guess, with their trading?
My belief is that the intuition comes from doing the same thing over and over again, or
Mm,
largely the same thing. For me, it's trading the same instruments every day. If you're jumping around all the time, I don't think your brain has the ability to kind of really dig into the nuance, to the subconscious. And I'm not trying to sound earthy and all new agey,
Don't
but
worry, I'm big into it. So go on.
yeah, no, I mean, if you like anything in life, if you do it enough and you
Mm,
immerse yourself in it, you begin to get insights that you can't quite understand why they're happening, but your brain has been processing this stuff behind the scenes. So, I might be like, I'm waiting for the euro to do X, Y, and Z. And then suddenly I'll be like, you know what? I got to get long here. I don't think that's going to play out, but I still want
mm,
to be long. And you
sure.
usually, if you trust that intuition and take that trade, it
Mm,
very rarely fails you. So, but I only think that happens if you're really specialized and honed in on your process day after
mm.
day after.
Yeah, nice. So, speaking about going along, you called, I think, in a RealVision interview. I think it was in 2016. So you said for the next 3 to 5 years, that gold would be an interesting one to hold, and it seems like it's played out pretty well for you. What are your thoughts with gold at the moment? And are you still holding on to that trade?
I don't own any gold. I kind of 2020 was a period to kind of get out of some of those because they had a nice run up. I was more into silver last year. They had a nice run from June into September. Right now, precious metals aren't really on my radar screen too much. They're kind of chopping around. For me right now, currently, the dollar's been moving around a fair amount, up and down. So FX for me has been more of a staple recently in terms of some really good trading opportunities, which, as you probably know, long overdue, because FX has been kind of quiet. I mean, it's been trending, but from a trader's perspective, it was pretty quiet there for a while, but that's changing.
So is there any other kind of FX pairs that you're watching these days that you've added to your stables?
Well, it just came off a couple of weeks of, being short Aussie and Kiwi dollar. Those were good. We started the beginning of the year kind of long the dollar, which was great. Everybody was too bearish, and that worked out pretty well. But, some of our trades, they may last, a couple of days. I'm not opposed to being a shorter term trader. Most of my trades don't last too long, usually several days to a week or two. Right now, the dollar for me is, and again, by the time this probably gets edited and published, this information may be a little bit stale, but right now the dollar it's just kind of chopping around right now. I think where I'm focused right now is on the S&Ps because of what's happened in the rate market, and the S&Ps have been weak lately. So more of my attention now is kind of shifting back to the S&Ps. Maybe this weakness continues. Maybe it's yet another buying opportunity. I think there's more opportunities there, at least right now, as of March 1st.
And how about crypto? Has that caught your attention at all? Is that something that you trade?
I don't trade it. It certainly captures my attention because it is highly correlated with the S&Ps. If crypto is rallying, S&Ps are rallying, and vice versa. I don't do anything in crypto. Again, it's just not something I latched onto. Maybe that was a really big oversight on my part, but again, I kind of keep my focus pretty narrow, maybe sometimes to my detriment, but you don't need something as manic as crypto or Tesla to make money. I mean, yeah, they're fun to trade. I'm sure it's sexy to talk about at the cocktail parties. Nobody wants to talk to the guy who's trading 10-year notes, but I like to trade 10-year notes, and as long as I make money in them, that to me is sexy.
That's the thing. If you've got consistent money being pulled out of the markets from it, then sexy to me too.
I trade what I know. I trade what I know. And if other people are experts in crypto, fantastic. Kill it. Knock them dead.
100%. Yeah, it's a fascinating place, especially on the broker side of things, when you've got, decentralized finance and the idea that people could at some point in the future be trading on completely decentralized exchanges with decentralized assets that are far removed from, regulation is pretty interesting to me. Just in terms of the fact that it could put a lot of pressure on other brokers to, lift their game and do things a little bit differently to what they're used to. And, in our opinion, the industry does need a little bit of a shakeup. So I really like watching what's happening on that front.
Well, this shift is something everybody needs to pay attention to, especially guys like me who've been in the industry a while, because it's easy to get complacent. It's like, well, geez, we just don't do things that way. Whoa, the minute you start thinking like that, that's when you're at risk of missing or getting blindsided. In fact, one of my good colleagues and friends out in Chicago, he runs a research operation, fantastic operation, big name clients. And he says, I'm at risk of becoming a dinosaur thinking about some of these new investment opportunities. And he was specifically referring to Kathy Wood over at ARK, with all these, kind of new technical or new technology that she's investing in. And she goes, and he goes, we're issuing reports on consumer staples outperforming value. And it's like, wait a second, maybe the world's shifting a little bit. Maybe don't be so reluctant to look at new things and embrace them. Because the minute you start getting tunnel vision and becoming an old curmudgeon, you're probably on your way out.
Yeah, for sure. And, you've really seen a lot of change happen in our industry. If you were back on the pits and then you went into prop trading and then you kind of saw retail blow up in terms of MT4 and that, kind of big growth that happened over there, and then moving into crypto and decentralized finance, like you've really got your finger on the pulse of change. So I guess, it's probably important to keep an eye on it. I wanted to ask, how did you actually find out about Global Prime in the first place?
Justin Hertzberg.
Oh yeah, nice. We actually interviewed him yesterday.
Yeah, I mean, I've known Justin for years. He's just one of the most solid people in the industry. And yeah, he's a friend of mine. He's a colleague, but Jesus, how can you not like Justin? He's just a great guy.
Yeah.
I think he's done wonders for the industry in terms of how he's presented the whole idea of FX brokerages, introducing brokers. Great stuff. Great stuff.
Yeah, very nice. Yeah, look, Justin and I also go way back, and I'm like you. For me in this industry, it's very easy to see who's a bit of a shark, and they're usually wearing a suit. And then there's other guys like yourself and Justin. I could probably rattle off other names as well that I myself am attracted to because I'm not a suit wearing guy. I'm wearing a shirt right now. I come from a trading background, trading in an attic with my cousin back in the day. So yeah, being amongst like-minded people is very important, I think. And yeah, Justin has that in spades. He's just an all-around great guy, like you said, and his understanding of the markets is second to none. And yeah, I love chatting with him. So check out the interview when we posted. It was a pretty cool one, and I'll let him know to check your one out as well. Do you have maybe any tips for clients on how best to choose a broker?
Yeah, I'd probably go with Justin on that, but because he's more versed on that. That's where he lives every single day, and of course he's got the legal background, which is a major thing. But I guess I don't want to say on what little I know because that's not true. I have to know about brokerages, but capital, fills, how their desk is run, agency desk versus are you feeding into a prop desk? I think those are all key things. I mean, geez, when was it when FXCM and all those companies were blowing up? Was that about 10 years ago, maybe or so?
When you say blowing up, do you mean like with Euro Swissy when they removed the Swiss National Bank removed the peg and they blew up, or do you mean more like became big?
No, just more of in terms of not being adequately capitalized. I think those days are behind us. I think most of the brokerages out there, they come to the marketplace and they've got a good capital structure, but I think people have to be aware that there's if something sounds too good to be true, don't be wiring them 10 grand because So, I mean, that would be my thing. Go with the steady established brokers. I mean, Global Prime is in that category. And I know that because I've spoken with Justin about you folks. I think that's the key thing. Make sure your money's held in good custody.
Good stuff. And is there anything that you'd like to see from the brokerage industry? Things change or any kind of new features that we could potentially look to add that you think that the people that you work with are looking for?
That's a great question. For me, again, as a U.S. resident, what I think is, and again, I know you guys always have to do it based on what the client demand is. I would love to see, 10-year notes that be part of the CFD structure at some of the brokerages because it's a pretty big market. It's pretty darn liquid. And I think people would find the trading of 10-year notes quite good. They tend to be a little bit more stodgy, but they move. They don't move like a cryptocurrency. Yeah. But for some people, I don't want that. I want something that trends. So maybe a wider product selection, but again, brokerages have to go with whatever volume is going to get pushed through their system. Yeah.
So look, I wrote a note on that one. But just to let you know, so we've recently onboarded a new platform called Trader Evolution. I don't know if you've seen it, but we're going to basically use that as it's pretty cool. Sort of like an institutional platform. We kind of got it for our institutional clients to have a GUI to click off. But we also opened it up to our retail clients as well. So anyone can use it. There's no like minimums or anything. So the plan is to really make
Trader Evolution?
Trader Evolution, yeah.
Check it out.
It looks pretty sexy as well. A lot of customability, but the plan is to really like fill that up proper multi-asset. So we've got, top 20 US stocks coming in. We're going to look at Aussie stocks as well inside there. So I got my notes now for 10-year notes. Let's see what we can do for you.
The one thing that comes up, and this has come up with, I've been working with RealVision since they got off the ground 5 years ago or whatever, and it's been a great relationship. And, they're always asking their contributors like myself and Tom Thornton and all the other guys you see out there, what is it that you hear from the brokers that the brokers would presumably want? And I make an assumption, and you can prove me wrong or right, but I'm guessing that from a broker's perspective, obviously you want to attract clients and you want to retain them. And I think the retention probably is where everybody's looking for that holy grail. It's like, how do you get that client to stay on board? And I think it's probably got to come from, just good onboarding, good education that you can provide people to hopefully prevent them from going down all the, the wild rabbit holes that they can go down. So that to me seems like one of the things that would be the most wonderful for our industry in general, because then you don't have people kind of telling the horror stories. Well, I blew my account up. And it's like, well, that's not the broker's fault. That's because you didn't have a game plan and you decided to be over leveraged on that one trade.
Yeah. So look, I 100% agree with you that, traders do need to be educated and be given tools to, to give them the most chance of profitability, long-term profitability. I have a pretty jaded view on the retail FX and CFDs industry in terms of how brokers operate their models. Pretty much every broker out there runs a B book where they profit from client losses and profile, losing clients into this B book. And the focus to me, if that's where a company places their focus, it's really not aligned with the interests of their clients to make money. And if this never existed, this idea of B books from the last couple of decades or however long it's been around, then everybody would really be competing to see who has the most profitable clients and what tools could I be giving them to make them as profitable as possible. But instead, they're marketed with 500 times leverage that they really don't need. They think that they need that to make money. The margin stop out levels are kept purposely low, and they don't care who comes on board because to them it's just food in the fodder. And they don't mind bringing unsophisticated people into the mix because they know they don't care if they blow up, because someone deposits $5,000, you can capture that $5,000 way easier when they blow it up than by having them consistently trade over however long it is. So yeah, I think the industry needs to change their models as a big part of it. And if that happens, then I think the focus will go towards what we kind of do, because we obviously don't do any of the debooking or profiting from client losses. And our focus is how can we make clients more profitable? Mentor rooms, education, sitting alongside them, inside Discords, having interviews like this with people where we can, really pick the industry greats. I really think you're one of them. Pick their brains and give them access to information they're not getting elsewhere. But instead, that's not really happening. So look, I could rant about that for ages. We have an A versus B series on YouTube that goes into it. So I'm going to shut up now, but yeah.
No, trust me. I am with you 100%. I mean, I provide information to clients, to the public. Anybody can purchase it. And I'm just, flabbergasted at some of the stuff that gets traction out there. Pardon my French, some jackass flying around in a helicopter saying he can make you $1 million. I'm like, whoa, one, no trader would trade from a helicopter. But people are attracted to that. So I suspect you probably feel the same way I do. It's like you want to compete at an honest, appropriate level, yet human beings are like, ooh, that's a shinier object over there, and they're over there doing that. So it's really hard to compete with the shiny objects but the shiny objects don't help anybody. It's just it's a charlatan ring. Yeah.
So look, it's a smoking gun. And I think 100%, I totally agree with you. And retail clients just need to be re-educated, but there's no incentive for a broker to do that when they're profiting, till the cows come home from everyone's losses. There was a statistic, I think it was I won't quote, it was between $500 million and $1.2 billion that was earned by ASIC regulated brokers. So I have to go and find that exactly the number again. But that was the amount that clients lost over that time as well. So it shows a direct correlation between the amount of money that clients are losing, what these brokers are making. So if clients get re-educated, and it's a long uphill battle, I think.
Here's the upside, Jeremy. What you're doing and what I'm doing is I grow like this in terms of my client base. It's not hockey stick growth. Sure. The people that ultimately find you, they find me and others like us, those are the clients you want. They usually show up after getting roughed up a bunch of times and like, oh, these guys aren't going to take my shirt and, sell me a bill of goods. So it's just a different business model. You build a long-term business model that'll be here for another 5, 10, 20 years. Yeah,
look, I 100%, I'm totally cool with that. We've grown organically and we have a great, fantastic, profitable business and our clients love what we're doing, blah, blah, blah. But at the end of the day, I didn't come here to just start a broker that's going to help, the amount of clients that we have. I want to see the industry change. And unfortunately, no one else is kind of picking up the handle to make this a sticking point. And I want to make a generational change. This is an industry that I love. And, I come from the trading background and I want the best for retail clients. If someone hears this message, I'm not saying it so they join us. I'm saying it more so they understand how this works. And the idea of these conversations, again, is to educate retail traders that they need to stop looking at the shiny object like you talked about and get real with themselves and actually take trading seriously. And that's a message that we're trying to go out there. And that's on the retail trader side. But there's also the industry side that you've got to, try and affect change as well, because as long as that carrot's dangled in front of them, and, I could talk for hours about some of the stuff that we've seen out there that, is enabled by these B-books. But anyway, whatever. Point is that I think that it's not just us that needs to, that needs to lead the way. It's also the industry that needs to change, and no one else is going to do it. We're going to. So yeah, good fun.
You would know better than me, but I'm going to guess, given that all these brokerages are in different countries and under different regulatory, I guess what probably doesn't exist is kind of a uniform overarching regulatory mouthpiece. Is that kind of where the challenge comes in?
Look, it's tough talking about regulators, I think, because, they've got their own way of doing things. And a lot of it's like a bit of a band-aid solution. Limiting leverage, I think, is actually a good thing, because clients aren't now going to be sucking into 500 times leverage. They think they need to make money. And, obviously most of them will blow up their accounts with that. There's, if you look at how many clients are losing money, the percentage of profitable clients at most brokers is like, 10 to 15%. But with us, it's much, much higher. I think probably as well because we attract a more sophisticated crowd, but maybe a big part of it is because we don't offer high leverage and we try and educate them. So, regulators have gone and limited leverage, but a lot of the, the knock-on effect of that is clients are now leaving the regulated brokers and now going into offshore brokers that, might not have such a sophisticated way of doing things, and they might get burnt and stuck further. So, to us, a big part of the issue is the profit model of brokers and the fact that it's not aligned with clients making money, which is what you're proposing to do when we're running a broker. Is you're supposed to be acting in the best interest of clients and helping them to win. But how can you say you're doing that when your interests are diametrically opposed to them? You're their enemy at the end of the day if you're like profiting from their losses. Yeah. Anyway,
listen, I hear you loud and clear. I hear your passion for it. And I think it's actually wonderful. I think, maybe it's something, and I'm sure Justin can go with this too. I mean, this is probably something we should talk about off and put our heads together. Who knows? Yeah. There's probably something there.
Yeah. And when we have these discussions, a lot of people just kind of go down the line of, but B-Book has better execution. We've actually unpacked this over like a 10-part YouTube series where we've shown that actually the execution isn't that much better on a B-Book. And there's so many other elements to it. For example, when you switch a client from A book to B-Book, their liquidity profile changes. All of a sudden they're trading in the real market, but they're not notified of that. So if they're trading in size, then all of a sudden, boom, all of a sudden they're getting massive slippage when they're getting VWAPs on their fills, for example. That's just like one example, but yeah, it runs pretty deep. Anyway, let's not run into it too much, but it's interesting.
Here's one distinction for new traders, and I've seen it all the time. Everybody's worried about, the spread's tighter at this broker, they're going to get a better fill here. First of all, figure out how to trade. Getting a tighter spread is not going to make the difference between you making money and losing money if your trading approach is rubbish. So the key thing is, like you're doing, the mentoring rooms, getting guidance from somebody else. That's huge. Trying to prevent people from going down the rabbit hole. That's how you're gonna retain your clients.
So, maybe I can put you on the spot is, would you like a mentor room with Global Prime? Is that something that you'd be keen on looking at, tapping into, our client base and helping them out?
I would certainly love to talk to you about that. I'd love to learn a little bit more about it. I mean, that's kind of what I do with my clients. We've got a Discord room to keep them more in the loop during the day, because I publish something in the morning. And then it's just a more timely way to keep people interactive.
Are they engaged? Are they engaged on Discord?
Yes, but it is difficult. And maybe you've experienced this, maybe not. But I've read many articles, and so one of the guys that works with me that kind of manages the room, he's read a lot of articles on that. It's really hard to get people to engage. They're either embarrassed or whatever the case may be. But once you get that thing going, it's really wonderful because you keep everybody on the same page. And we try to do a good job of saying, if somebody starts talking about some different strategy, it's not that we're trying to, disregard it. It's like, no, let's keep on the same page here, because if you start putting too many cooks in there, then everybody gets confused.
100%. Yeah. So, that's really the approach that we're trying to do with our clients, is to say, choose your approach, choose a mentor. Don't try and choose 5 mentors and work it out between them. Just choose one guy. And, the guys that we bring on, if you want to be a mentor in these rooms, you've got to be engaging with the clients and engage with them. And yeah, I think we've hit the nail on the head. Some more than others, but, over time, I think some will naturally fall away to the wayside that didn't work out. But the ones that are doing really well are doing really well. We're seeing people actually turning from being not profitable to being profitable. And yeah, it's almost like, from what I've seen, the approach that these mentors are taking, they really know how to break their strategies down and really guide a client along. But it's not just in terms of the strategy, it's also the mental approach as well. So it's pretty cool. We also have like a weekly call that we do with Ivan, who's a markets analyst, and Greg, who's one of our mentors and traders as well. And we kind of all get together with our clients and, just shoot the shit and go through stuff. So I think you've got to engage on multiple fronts and, let the clients know that, and also create a safe environment for them to trade in, which is a little bit trickier as well, because, traders can be a little bit hot-headed. Some have big egos, and, trying to manage that, I think, is part of it as well. But yeah, it's good fun. So look, I think we'll definitely chat after, and
absolutely.
Yeah, could be cool to bring you in the ecosystem and see if you can provide value to our clients. And yeah, I think it'll be great.
Yeah, I'd love to chat about that. That sounds really good.
Very cool. So look, before we wrap it up, is there anything else that you'd like to talk about today? Any final points you'd like to make?
Not really. I mean, other than if you're seriously considering getting into trading, do it. It's the most amazing thing in the world. It's the hardest job, but it's also the most rewarding. I had a buddy of mine who's still in the industry, one of the few people that I worked with early on who's managed to survive, and he's 10 years my junior. And he says, you haven't worked a day in 20 odd years. And he meant that in a very flattering way, because I love doing this. I absolutely love it. There's days, where I get roughed up like everybody else, and that really sucks, but I don't have to go punch a time clock. I can do this from wherever. My wife told me yesterday, she goes, you have no idea how lucky you are. She's doing extremely well as a C-level person within the healthcare system. She goes, but I'm still part of an organ. I don't call my shots. You call your shots. And that's a wonderful thing. So my point is, if you really want to do this, take it seriously, and then offers you a tremendous amount of freedom. Although I probably work just as much as anybody else. I love what I do. So, but it does give you the flexibility. If I want to cut out and go skiing or mountain bike riding, boom, gone.
Amazing. Well, look, for someone that's worked in the markets for so long, you've still got a beautiful head of hair, which means that you've worked out a way to make it work for you.
I've been blessed with the heredity of no issues there, thankfully. Got some gray, but
that's all right. Silver fox.
That's just from age. I don't think it's from stress. I don't get too stressed doing this.
Very cool. Well, look, that's amazing. Look, I really enjoyed this conversation. So thank you so much. And maybe we'll put it down to the people that are watching this. If you'd like to hear some more from Dave, let us know. Maybe we can make this a bit more regular, because I think there's a lot we can learn from you.
Oh, that'd be great, Jeremy. I really did enjoy it as well. These are the type of conversations I like to have.
Cool. Well, thank you so much for your time, and I really look forward to doing it again soon.
That sounds good. Take care now. Bye-bye.
Awesome. May the pips be with you.
Yes, thank you.